Well, a very happy Dhanteras to all our viewers of ET Now for making, of course, the channel a great success. But not only that, benefiting from the advice which we give out there to you guys with the help of all our big contributors. May you have a great Samvat 2076. But of course, the last 1 year has been pretty soft for investors. Just about 11% gains coming in for the Samvat which has gone by. Let's get in our guests also on the show. Amit Jeswani is right here in our studios today. Amit, happy Dhanteras to you.
Same to you.
And
thank you so much.
Wonderful for dropping by in our studios today. Tell us how the last 1 year has been for your own portfolio, the strategy which you manage, and looking at the next 1 year, what is the hypothesis which you are forming?
Ajay, thank you so much for having me on your show, and a very happy Diwali to all your viewers. The most important thing between 2003 and 2017, the bull market was about chasing growth, and no one cared about corporate governance. Like the fifth most important thing was corporate governance. This bull market would be called the Swachh Bharat bull market, and the most important thing would be corporate governance, then growth, and that's how, and the last thing would be valuation. So even this will correct someday, but for the next 2-3 years, I believe where you have good quality, good governance and growth, keep chasing those stocks. Look at markets are telling you, and just do one thing, avoid the leaders of the previous bull market. The previous bull market leaders were auto ancillaries, your wholesale backed NBFCs, and so just avoid that basket and look at newer leaders. So typically in a bull market, the stocks which hit the new high after a bear market, they lead the bull market. So you look at insurance companies, virtually all insurance companies are hitting new lifetime highs. Look at diagnostic stocks like Dr. Lal, other stocks as well. They're the ones who are first ones to hit a new high. Look at consumer electronics. So like Whirlpool, Voltas, these are stocks which have started the bull market, and that's where larger money, private banks. See, even Warren Buffett, Ajay, I'll tell you, in 2000, look at his portfolio now. He's there only in 4 sectors: financials, consumer pharma, consumer IT. Apple is 25% of Warren Buffett's portfolio. And financials are 45% of his portfolio, consumer is 25%. We have to be in these 4 sectors. And you look at his portfolio in 2009. It's broadly the same. IT was not there. He had consumer healthcare that time in 2009. Sure. So it's the same. Last 30 years, all Warren Buffett has done is buy companies which are getting better with size.
In fact, Amit, you're talking about consumer discretionary kind of stock, which may actually do well from here on. I have my colleague from Delhi joining us on the phone line. Let's get to her because she's talking about some of the steps which the government may actually take, through which consumption in the economy actually may be boosted, because right now economy is clearly on the priority of the government, and Ruchi is here to talk about some tax cuts which may be coming for the citizens in our country. Ruchi, tell us, what are you gathering?
Absolutely, Ajay. The next 3 months, there could be good news coming in for the salaried class. I'm given to understand by top government sources that the government may be mulling personal income tax in the next budget. While I'm given to understand that the scope of these cuts could be much wider than the normal adjustments that are made every year. So you can expect some relief coming in for the consumers. And this, of course, will give the much-needed fillip to consumption, the much-needed fillip to the economy, and put more money in the hands of people. Having said that, this year the government is struggling with their revenues. We know that after the corporate tax announcements and the slowdown in the economy, the government is likely to see a tax shortfall of over 1.5 lakh crore rupees. They're also expecting that post the corporate tax announcements, there is a likelihood of a big drop in the advance tax collection in the October-December quarter as well, and which is why field units of both CBDT and CBIC have been asked to amp up the efforts to go ahead and collect more revenues. There are 3 to 4 basic directions in which they're working. First of all, of course, expecting that some more money can come in by pursuing the direct tax dues from the past. They've asked the field staff to see if TDS of companies can be deposited in time. We'll be approaching the courts as well for speedy disposal of these cases. Having said that, growth in revenues is not going to, have expenditure plans so far. So you can expect some slippage this year. But having said that, the idea of the government is to push growth, is to push the economies to get more money in the hands of people. and which is why a personal income tax is very much on the radar of the government. Remember, the DTC panel has already submitted its report, and we can expect that in the next 3 months, once again, the government will be looking to give a bonanza for people like you and I.
Right. Thank you very much for that exclusive news break, Ruchi. In fact, I'd like your reaction on that news break, which my colleague just did, about tax cuts which the government will be considering in the next couple of months. How do you see the listed space could actually react? And which are the sectors for which this tax cut could be positive, getting in more sales, and which could be the negative ones?
Ajay, only 3 crore people pay income taxes in India, and only 98,000 of them show income of more than 1 crore. It's going to benefit AMCs. It's going to be a negative for life insurance companies, because a lot of people, like 50-60% of people, do life insurance to save their income taxes. So it's going to be a negative for life insurance companies. Consumer spending, that is one place. Consumer is a very, very long-term story in India. It's not going to affect your HULs and all that. No one's going to have better biscuits or something like that. But your electronics, consumer electronics, and those kind of businesses, yes, it's going to be a very, very, very positive. Retailing, consumer branded retailing, that's one space that looks good.
Amit, I'd like your opinion on financials in a moment, especially the banks, the corporate banks, even from the PSU side, because SBI results are coming out today and people are watching out for that. My colleague Varun is there to give a gist of what to expect in the numbers from SBI this quarter, and then we'll talk about this space. Varun?
Yeah, afternoon, Ajay. So, as we've seen a slowdown in overall loan growth across the banking sector, SBI seems to be recording the same phenomena. So, loan growth should slow slightly, coming in at around 10-11%. So, what happens to the operating metrics is your NII also registers a marginal increase of around 10% based on our poll, should come in at around 23,000 crores odd versus 20,000 crores last year. Now, the PAT figure is subject to some divergence because, as you earlier pointed out, the SBI Life gains should offset some DTA impacts. So, there'll be some adjustments there, a one-time gain plus tax adjustments. So, we need to allot for that. So, operating profit on the whole barely sees any increase. It just jumps about 0.5%. Now, some other key things to look out for are just the NIM trajectory under the new lending regime, where these repo-linked rates are impacting the outcome for bank on loans. And then also your recoveries of NCLT and older, aging NPLs, which are also going to lead to a hike in provisions for this quarter.
Very much for that, Varun. Amit, talk to us about your own portfolio. Financials is one space you look at closely, but within financials, first, what percentage of your portfolio is financial and how's the classification looking like?
See, our portfolio, all 3 products are between 40 to 50% financial. We're always in financials. Financials is one space where you can make tons of money. So we have the top private sector banks, the top 2 private sector banks. We have one insurance company. We have top NBFC. We have one gold finance company. We have one general insurance company. So that is broadly 45% of our portfolio, and we are very bullish on that. And we have one leader in the microfinance space as well, which is growing at 40-50%. So financial is a place where I strongly believe that follow technical analysis. I shouldn't say that, but financials are trending in nature. If things start getting better, everything starts getting better. And in consumer stocks, like Asian Paint, like the high quality consumer stocks, you buy them whenever they fall 20%. So be a fundamental analyst on consumer stocks and be a technical analyst on your financials. Financials are very trending in nature. High price to book. Ajay, I'll tell you one thing, very important thing. There is no evidence which says that buying low price to book creates higher wealth in financials. Okay. In fact, buy more expensive financials.
Like HDFCs of the world, like Bajaj Finance of the world.
Exactly. And that is where you can, because if they can dilute at that multiple, then it's great.
Right. Let's talk about auto space as well. First, let's get in what to expect from Tata Motors this quarter, and then we'll talk about some of the numbers which have come in or how you're looking at the space. But Karunya is here for a lowdown on what to expect from Tata Motors. Karunya?
Ajay, I wish I could say that it's going to be a better quarter finally for Tata Motors, but unfortunately that is not the case. Once again, Tata Motors is likely to witness a weak performance for the quarter gone by. Do remember in the last quarter, which is Q2 of FY20, not only was the JLR business under pressure, but also the standalone business witnessed a huge amount of slowdown blues, and that's something that's going to translate quite badly quite poorly on their numbers on a consolidated basis. We're expecting a revenue degrowth of 12%. EBITDA is likely to fall 18%. Losses could widen to 1,500 crore. We're expecting a margin compression from 8.7% to 8%. Well, but what the good news or the silver lining is that on a sequential basis, there's good improvement seen. Do remember that JLR has also done fairly relatively slightly better. So on back of that, on a sequential performance basis, we're likely to witness an expansion on margins and a contraction in the losses. So that's something to watch out for. For JLR, we're expecting margins to come in at 8%. For the volume growth, we're expecting somewhere around 2.5% to 3% growth for JLR. What should we watch out for from the commentary? Well, most important will be the turnaround plan for JLR. That has been a huge overhang for the company. So let's see what they have to say this time around, if at all it's anything different from the previous few con calls. We also want to know what the demand scenario is like in the local markets for JLR and the key global markets as well. What exactly is the pipeline looking like for JLR as well as for domestic, for the standalone business as well. So some important things to watch out for, but definitely the numbers are looking pretty bleak right now.
Right. Thanks very much for that, Karunya. Let's shift focus, Amit, and talk about NBFC space. There's a mega deal which got announced today, and we will be getting the top management of Piramal Enterprises also gradually on the channel. 5,400 crore they've managed to arrange from existing shareholders, plus promoters will be putting in. What are your thoughts on Piramal? Some of the similar names where the issue of debt, etc. were there, maybe Edelweiss, that you look at that business model closely. What are your thoughts here?
Ajay, broadly I'm telling you, in last 25 years, no one has been able to make money in corporate lending in India. So there is no evidence that corporate lending can make money in India. Piramal has large exposure to retail, to real estate developer loans. This thing will take time. It will auto-correct probably, but it will take time. It will take 1 year, 2 years, 3 years. But growth is not going to come back. And markets chase growth. So this is not a time. And these were the leaders of the previous bull market. We typically do not touch. If you see the previous, like look at all bull markets. IT was the bull market leader. For next 4-5 years, no one made money. Between 1996 to 2000. Then it was pharma between 2009 and 15, and no one made money. Everyone kept calling it value, but it was just the value trap. The same happened in between 2003 and 2007. The leaders were infrastructure, real estate, commodity stocks, and they've been value forever. So the leader of the previous bull market was those auto ancillaries and your wholesale-backed NBFCs, and I don't think that we will not get in there. So the business might do okay, but we are not looking there.
What motivates you to work? Is it fame? Is it ego? Is it money? Is it success?
I think it's a lot to do with the fact that, I'm allowed to do what I want. I have a nice choice and I have a nice life where I can work and do exactly what I want and take time off also. And money is there, because I think I'm a sensible Sindhi. There is a little Sindhi blood in me.
All right, so that was a sneak peek on what specials which we have planned for you on this Diwali. But Amit is still with us. Amit, talk to us about areas where you are nibbling in, areas where when your clients are giving you additional money over the last couple of months. Where are the areas you are nibbling into?
We've bought one consumer MNC pharma company, consumer tech. So our portfolio is Ajaya 45% financials, 25% consumer, 25% consumer tech. These are companies like, the consumer tech, a few new IPOs as well. Okay. And 5% is consumer pharma. So that's broadly our portfolio. We are very focused on the consumer side. And we believe that large money is made when there is large growth. So the majority of our companies are growing at 20% plus.
Okay. One honest confession this Diwali. Areas which you badly got it wrong in the last 12 months in your portfolio.
I'll tell you, 100% I got it wrong with the NBFC crisis. I fell down 20%. We've hit lifetime highs again after that. So I was long Piramal, I was long PNB Housing, I was long Edelweiss. Okay. We cut all of them. See, it's not that every 5 years, if you see in my history, I've done mistakes, because we catch growth. And growth is where we catch the leader of the bull market, right? NBFCs was the leader of the bull market. We were 30% in NBFC. That was our weight before the NBFC crisis happened. When the NBFC crisis happened, we understood that game is over, the trend is over. The trend finishes, we are out. So we sold out of all these NBFCs, got into quality stocks, recovered everything back, and now back to hitting new highs.
That was quite honest of you. Thank you very much for dropping by, Amit.
Thank
and
you.
Good luck for your portfolios also in the coming year.
Thank you, Ajay.